Discuss income statement. This is an easy chapter, and we'll see what is discontinued, how to show discontinued operation on your income statement, extraordinary items, accounting changes and errors, earning per share, long-term construction contracts, revenue recognitions after delivery, consignment accounting, and in the last we will see the fair value measurements. Now, what is a discontinued operation? Generally, if you are a company, you have 3 branches. This year you decide to close 1 branch. So I will treat it as a discontinued operation. 2 branches will be a continued operation, and 1 branch will be discontinued operation. It is very important to segregate between continued and discontinued operations, because if I will not do, I am not fair to the reader of the financial statements. I am hiding this information that we have closed 1 branch. So that's why standards force us to make a heading called income from continued operation, and whatever is discontinued sale expense related to, we have to show it as a special heading for that. So it says when we are discontinued, if there are 3 conditions met. One is a component of entity has been disposed of or classified as held for sale. Sometimes you can say, okay, this is now we are going to sell it. Management has decided. So it is not actually sold, but you have classified as your current asset as your held for sale. If this is the one. If operational cash flow will be eliminated from the entity, an entity will have no significant control or involvement after the disposal. If there are 3 conditions met, then we will consider this unit as a discontinued operation for you. How to show in income statement? He says that operating results of a component has been disposed is classified as held for sale are reported in discontinued operation. So you make a separate heading, you bring all the income and expenses of that discontinued operation. For example, we close a branch in November, so first 11 months income, expenses related to has to be shown on the face of the income statement. Then he says this section is presented after continuing operation but before extraordinary items. So there are 3 sections mainly: continued, discontinued, and extraordinary items. When a component is classified as held for sale, it is measured at lower of its carrying amount or fair value minus cost to sell. So any asset related to this component, if you have decided to sell, then of course that you will use the method that is mentioned, lower of. Lower of means either carrying value or the fair value minus cost to sell. Generally we say NRV, net realizable value, in IFRS language. That is again the same, cost minus expenses to make it sellable. So here we can see he showed revenue, expenses here. So this is normal income from continued operation. Then we have income from discontinued operation. So he give you a note, losses, everything, then income before income tax, then loss on discontinued operation. So a separate heading. Imagine if we don't do that, we add only here. So it will be very injustice to the reader of the financial statement, because he will assume that you have more income, right? Because next year this income is not going to repeat. You are going to close the branch. It says the result of discontinued are reported minus plus income tax benefit if there is a gain or loss, right? Gain and loss on disposal must be disclosed on the face of income statement. Basic and diluted earning per share amounts for a discontinued operation are presented on the face of income statement or can be in the footnotes, depend on the scenarios. There are 2 types of earning per share. We will study this because now every shareholder want to know what is his contribution in per share, what he is getting against the income. So we take income from income statement and we take the weighted average outstanding shares from balance sheet and we divide them. So we get a earning per share. Basic earning per share is the one that is we generally calculate. Diluted means that which does not have effect of preference and other stocks, right? So we make it more purified, because some people argue that common stock is an equity, but preferred stock, because there is a fixed dividend on that, so it will be a hybrid equity. So remove it from the calculation and dilute it. There could be some adjustments. He says amount reported in discontinued. If the adjustment is directly related to prior year disposal, it is reported currently and separately in discontinued operations. So if you have any disposal related to, of course you have to prior period, right? So you have to, that any adjustments prior year, you have to adjust your retained earnings, right? Because you can't go back and open only effect is there in retained earnings, right? So you adjust that and then you disclose it that this was a prior year adjustments. Contingencies are those which are the situations arises when you have a legal issues. So under the term of disposal, transaction may be resolved, for example, by purchase price adjustments. Contingency directly related to pre-disposal operations of the component, that may also be resolved. So any kind of contingencies related to these disposal, you can resolve them through different ways, different methods. Employee benefit plan obligation for pension and other post-employment benefit may be settled. Means there are 10 employees related to, they are entitled for pension and other things. You have to settle them so you can close these operations. Right? This is like a final settlement generally we do. Extraordinary items. Generally IFRS does not show this as a separate heading as an extraordinary item. You never show in your balance sheets, income statements, right? But in US GAAP we still use a material transaction unusual in nature and infrequent in occur. For example, lastly there was Irma hurricane, there was Maria hurricane was coming in Florida, others. This is abnormal, like it is so windy and fast and category 4, 5 that you cannot handle this, and it does not come every day. It is once in some cycle, 5 years, 7 years, something. So they bring extraordinary losses for you. Means your warehouse went with the air, and your assets, your cars are flooded in the river this way. So these you show it as an extraordinary items. So a viewer of the financial statement can understand that this year you have extraordinary losses. How we do just estimations. Estimations are provision, liabilities, and your judgments. So included in the extraordinary item previously reported as separately presented and disclosed in the current statement. They are classified in the same way as the original items. He says IFRS, no item are classified as an extraordinary item either on the face of the income statement or in the note. So IFRS does not allow you to give a heading called extraordinary items. Moving forward, we will discuss accounting changes and error corrections. Before I will go through one by one, we should know sometimes we find there are changes required. So how to make changes? For example, I am using straight line method. Now market is moving to another method, so I need to change. So the question comes, should I change today? Should I change from backwards? Should I, when we get the increment, so first question comes, oh, this is from the last year, I will get the accumulated amount, or it is starting from today, or I will get it next year. These are three questions come in our mind. Same way.